Michael, so good to see you right off the jump here. Look, we had Bitcoin hit a record high just a few weeks ago, $126,000. We've seen this pullback here over the past few weeks. I look at strategy stock down about 27% over the past month. Are investors losing faith in the Bitcoin movement?
No, I don't think they're losing faith. If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. So if you want max performance, you're going to take max volatility. Strategies up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody, you want no counterparty risk, you buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. Yeah, the vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s. And you get a mixture of a dividend and principal protection and some of the upside of the common equity. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. You know, STRC is meant to be very, very stable, around $100 plus or minus a few pennies. And you get like a 10.5% dividend, you know, that's tax deferred, and you're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave.
Michael, and as we've gotten more instruments to ride the digital wave, particularly as people have had more and more ways to directly invest in Bitcoin, strategy stock has not done as well. To your point, it has over the past several years. But again, if you're talking about getting in now, or if you got in earlier this year, you wrote it down even as Bitcoin was going up. Are you concerned at all that the crypto treasury, the digital asset treasury strategy that you pioneered is losing a little bit of steam?
You know, over the last year, there's been 100 companies that have added Bitcoin to their balance sheet. The derivatives market and IBIT has surged. The flows into the ETFs have surged. All the major banks have announced support. The accounting has dramatically improved. The tax regime has improved. The administration support at the SEC, the CFTC, the Treasury level has improved. And so, and the technology has improved. You know, companies like Block have rolled out support for Bitcoin on Square and Cash App. So all the fundamentals are good. If you're going to be an equity investor, you have to think for yourself, and you have to have a time horizon of 4 years or longer. And equity markets are either going to lead or lag, and occasionally they'll perfectly reflect reality, but generally it's only a few days a year when they'll be perfectly rational. So if you don't have that 4-year time horizon, and if you don't want to make decisions based on fundamentals, if you simply want to park your money in a stable instrument and pick up a stable yield, you should be a credit investor. You shouldn't be an equity investor. I think the irony is the fundamentals of the industry are so much better today than they were 12 months ago that you've now got an extraordinary risk-reward opportunity. Now is a much better time to invest. You know, all the things that you wanted to happen have happened. The market sentiment is negative, but that's an opportunity for the equity investor that makes their own decisions.
Michael, you're seen as a pioneer in this industry, charting new territory in cryptos and Bitcoin. What do you think about the likes of a Jim Chanos and others like him that are trying to profit off of you not doing so well?
You know, I don't really think about Jim Chanos. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit is got a tax equivalent yield of 4 times higher than bank credit. You know, you can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. I don't really focus on them. Nothing great has ever been created by a short seller.
Michael, you've referred a couple times to this new digital asset credit that you guys have developed, STRC Stretch. It's a preferred security that, as you mentioned, pays out 10.5% in yield. And this is also a way for you all to not necessarily issue more stock in the underlying equity in order to pay for buying more Bitcoin, and therefore maybe not diluting those underlying shares as much. But how far do you think you can take that as sort of a funding mechanism for your Bitcoin strategy?
Well, I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury type instruments in the United States. Stretch is about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid 40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1. And then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon.
Michael, of course, we're having this conversation the day after the government shutdown officially has ended. Things have to restart up again, but still record-setting shutdown. What did you think about the length of the shutdown, and do you believe it reinforces your long-term view on Bitcoin and various other cryptos? Because look, at the end of the day, record-setting shutdown, I mean, how can you have trust in the dollar?
Well, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy 1 Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever.
Michael, do you think, in light of the shutdown, that investors have lost faith in our country?
No, I don't think they've lost faith in our country. I think the country's going to do just fine. This is a hiccup. It's not our finest moment. But right now, the exciting things that are going on are digital intelligence, digital assets, digital capital, digital credit. It's pretty clear that money's going to move at the speed of light. It's pretty clear that a billion AIs are going to think a billion times faster than us human beings. You can see a world where a billion robots are going to build everything we need, where the cars are going to drive themselves, where the products are going to figure stuff out for us. So we're moving toward an intelligent world that is millions of times more efficient and more empowering. So in a world where a billion robots do everything I want before I think to ask for the thing, I don't know how I won't be better off.
Michael, is there a risk that some of those robots, or perhaps quantum computers combined with generative AI, that they crack Bitcoin, or that they think of something better than Bitcoin and it becomes obsolete?
No, I don't think there is a risk. I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded.
I was going to say Tim Cook's sending you a check in the mail, but I guess now Microsoft and Alphabet have got to send you a check too, because you mentioned all of those. Let's talk a little bit about the bigger market because of the AI advances that you're talking about. You know, you're very familiar with the dot-com bubble, right? Because you founded MicroStrategy in '89, you went public in '98. I was looking at the history of the stock chart here. You went public at $12 a share. The stock at that time spiked as high as $313 in 2000. And then crashed down or remained below 20 until you initiated your Bitcoin buying strategy. I'm curious, you know, as you look back at that crash, what that taught you and whether you see any parallels today. Obviously, you're aware of the big bubble debate going on right now.
I think it teaches you to focus. Don't overextend. You might have 10 good ideas, but you're better to focus upon your one idea and to commercialize the one idea. It also just reminds you that no matter where you are as a corporation, you can always improve the company's outlook, and you can improve and create shareholder value by harnessing the next wave. People wrote off Apple for dead. I mean, Michael Dell famously told Apple to shut down and give the money back to the shareholders back around '97. And then Steve Jobs returned and he harnessed the internet, and then he harnessed MP3 files and digital music in order to revive Apple, and then eventually created a crazy thing called the iPhone, and it became the most valuable company in the world. I think history is replete with examples, you know, whether it's the internet or whether it's AI chips, people wrote off GPUs as being irrelevant, and all of a sudden we have the ChatGPT moment. The Bitcoin miners were struggling, and then AI explodes, and now everybody wants their energy. I think that digital intelligence, digital assets, digital capital are creating the most compelling opportunities for corporations in the world today. I think the important thing is to use them the right way. For example, we used AI in order to design those 5 digital credit instruments. So people ask, how do you make $1 billion with AI? Well, we created $8 billion with AI just by designing new types of securities. Yesterday, STRC traded $175 million. It's the most successful preferred stock in the century, maybe ever in the history of the capital markets. It was designed completely with AI. It's 100 times better than a good preferred stock. I would encourage anybody with any corporation to think about how you turbocharge your company by using digital assets, digital currency, digital capital, or digital intelligence. There isn't a company that you can't improve using technology in the year 2025.
Michael, later on in the program, I'm going to be sitting down with Eric Trump and Asher Genoot. They're, of course, working American Bitcoin and Hut 8 mining those operations for American Bitcoin. And I know they're very focused on power generation. As you look at your long-term outlook for Bitcoin, other cryptocurrencies, how concerned are you that this country can't produce the power it needs to meet the demands of cryptocurrency?
You know, I think the company got a wake-up call. Back in 2020 and 2021, I talked to a lot of power companies and energy companies, and they were about to decommission all their nuclear reactors. We were staring at all the nuclear reactors getting decommissioned, and there was a movement to shut down nuclear energy in this country. And of course, in Germany, they shut them all down. From early 70s, 73, all the way till 2023, the nuclear industry was persona non grata, and it was politically incorrect. And I think the explosion of AI, and when people started using these AIs and realized they're actually quite useful and they're transformational, it created a reconsideration and a political shift in the United States. The Overton window shifted. And as soon as Google and Microsoft and Apple and Amazon realized they needed energy, nuclear became cool again. And we flipped from 50 years of not wanting to build power, whether it's nuclear or natural gas was out of favor too. People wanted to shut down natural gas. All of that changed in the past 2 years. And now the political sentiment in this country is we should develop natural gas, we should develop nuclear power. And of course, we're only about 1 to 2 years into that sentiment shift. But I have confidence that the United States is going to move from a laggard to a leader in the energy generation business, because now we see we need the energy to drive our cars, we need the energy to power up our robots, we need the energy to think 1 billion times faster, 1 billion times quicker, and we need the energy to defend our digital assets like the Bitcoin network. And the only thing that was lacking was the political will, and I think that has flipped 180 degrees. There's bipartisan consensus. There's not even a debate right now about whether we should generate more energy or build more power plants. 4 years ago, you couldn't have done it. And so I think we've been saved by the explosion of digital intelligence and digital assets in this country. It'll be good for the nation. It'll be good for the world.
Michael, obviously, you're a serious guy, right? We've talked a number of times. You think very deeply about all these issues. But then sometimes I look at your X account and I see you posting or reposting these various sort of digitally generated images, AI generated images of yourself. They're a lot of fun, right? Of you, we're showing one of you in a top hat, various Bitcoin paraphernalia, superheroes, et cetera. Like, you know, I'm just curious how you think about that. Is that, you know, is your Bitcoin, you know, advocacy, is there an element of shtick to it as well? Are you having a little fun with it? How do you think about all of that?
You know, when I was growing up, there were 3 channels on television, and they turned off the television, the signal at like 11 o'clock at night or midnight, and for 8 hours there was no programming. There was no internet. We didn't have, today, we have infinite free music, infinite free television, infinite streaming video, infinite free YouTube. You can get lost, fall in a TikTok hole, an Instagram hole. You can get on stream and Twitch. We have managed to manufacture infinite everything. It used to be you had to have money to get a newspaper or a magazine. And now, you can see we live in a world where we have, to say 1 million times more content would be probably an understatement. So the entire society is being inundated with information, and their attention span has shrunk. And so people just don't have an hour to listen to what you have to say. Sometimes they don't have a minute. Oftentimes I think, should I say it in a podcast? Well, maybe someone will listen to it. Can I say it in 5 minutes? That might be too long. Can I say it in 30 seconds? Sometimes I'll write a paragraph and you think, no, I don't have a paragraph. People will read the first sentence, and then I write the sentence and I think people aren't going to read to the end of the sentence. And so the thing you learn from social media is you need to get to the point. So how about tell me what you want to say in 1 second? And the cliche is a picture is worth 1,000 words. And so sometimes I don't give you 1,000 words because you would lose 99.9% of the audience. In fact, I would say you'd probably lose 99.99% of the audience if it took 1,000 words. Show me the picture, and that will go viral. And you're doing people a service to give them an idea that travels a million times faster, that is a million times easier to digest, because people just don't have time. They're busy. They're being inundated. And when you see those images, that is us communicating something cheerful, constructive, useful, perhaps profitable to someone. But like if someone says, hey, I wrote a book on this, here's the book, do you want to read it? I mean, how many books can you read? Literally every book written in the history of the human race is available for free to you right now. Do you really want someone with a good idea to give you 250 pages and tell you to read it? Or do you just want them to boil it down to one sentence, one tagline, or one picture? Because I'm like, show me the picture. Okay, got it. Now I can move on with my life. Thank you.
You're making a lot of sense to me, Michael. Stay with us for a second. Let's bring in our social correspondent for the day, Yahoo Finance's Ali Canal, with some of what she's hearing from our online audience during this interview. Ali.
Yeah, well, Brian, Michael Saylor just talking about infinite content on social media, which is the perfect segue since we are talking and taking your questions on social media. Plenty of viewers chiming in, and starting off with a strong one here, Michael. First question, do you see Bitcoin catching up to and surpassing gold's market cap by 2035? What say you?
I do. I think we're in we're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. There's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
And another social viewer wants to know, why should an investor buy strategy stock instead of a Bitcoin or spot ETF?
Yeah, if you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if you're short, your time horizon is less than 4 years. If you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform your money market. You might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, in a month, in a quarter in a year, and you don't have to, worry about the roller coaster.
One of the biggest new names in the crypto space is American Bitcoin, backed by Eric Trump, Executive Vice President of the Trump Organization, and Hut 8 CEO Asher Genoot. The business aims to make the U.S. a crypto mining superpower. Hut 8 specifically is also looking to capitalize on the intense energy use needed to power AI data centers. I have been really looking forward to this chat and invest all day long. I'm here with both Eric Trump, co-founder and chief strategy officer of American Bitcoin, and Asher Genoot, executive chairman, to talk about the business behind Bitcoin and where this is all going. Good to see both of you, gents. Eric, coming right to you out of the gate here. You are the ultimate hard investment guy, building world-class properties, golf courses around the world. Explain to us where does the passion come for Bitcoin?
Well, listen, it's the greatest hedge against hard assets. I really believe that with every aspect of my heart and soul, right? I mean, it's immediately liquid, it's global, it's transferable. You can transfer 24 hours a day, 7 days a week, instantaneously, hardly any fees. You can't do that with hotels. You can't do that with real estate. So I think it's the greatest hedge against what I do every single day, which is kind of the hard asset world. I think it's also a great hedge against inflation. It's a great hedge against corruption. It's a great hedge against poorly managed monetary systems around the world. And I think that's why you see this global influx to Bitcoin. I think it's become probably the greatest asset of our time. You see roughly 70% appreciation on average year over year over the last decade. Name an asset that's had that kind of appreciation. You just won't find it, Brian. So, and frankly, a lot of this for me personally, because we have a little bit of a political hat in my family, as you know better than anybody, comes out of getting canceled by banks over and over and over for doing absolutely nothing wrong. And I think cryptocurrency is going to be the future of finance. And I think blockchain solves a lot of kind of the weaponization of the banking industry that's affected so many, not only in this country, but around the world. And so I'm deeply passionate about it. American Bitcoin is going to do it better than anyone. I mean, we started the company just under 8 months ago. We're the 25th largest Bitcoin accumulator in the country right now, public at least. And we're climbing that ladder very, very quickly. So unbelievable things to come, and I'm incredibly proud of Asher and everything that we've created on this end.
Strong start for American Bitcoin, Eric. What's next for this company over the next 12 months? What is your product roadmap? And then even along the same lines, how in the world do you mine Bitcoin so cheaply?
We mine Bitcoin so cheaply because we've got cheap energy. And by the way, isn't it nice to be able to do that in the United States of America, where we actually have favorable energy policy? We haven't had that for a very long time. You see it with oil and gas and everything else coming down to record lows right now. It's a beautiful thing to see. America has to lead the way. Energy cost is everything. Energy cost is directly correlated with GDP. The lower the energy you have, the higher your GDP, and that's what we want for this country. So we're doing it in West Texas using some of the lowest energy costs. Brian, we're mining Bitcoin for roughly 50 cents on the dollar to the average, to the spot price of BTC. Every single day, 24 hours a day, we're mining Bitcoin and we're adding it. And we believe this asset's going to be transformational. Listen, a little while ago, I looked at the exact price of Bitcoin 2 years ago from today. You know what it was? It was 36,500, and now it's sitting at 105, 104, bouncing around. It was up past 120 a month ago. Bitcoin has been one of the greatest assets of our time, and even now, as you see volatility, which you always see in cryptocurrency, because naturally a slightly higher vol, we're still 170, 180, 190% higher than we were at this exact date 2 years ago. And I think that speaks to the fact that everybody around the world wants it. Every Fortune 500 company is putting it on their balance sheet. Every family office is buying more and more. People are hoarding it. And this isn't just in the United States. This is all around the world. It's an incredibly exciting asset class. And I believe in Bitcoin with every aspect of my heart and soul.
Eric, you know everybody in this industry, of course. Earlier on, we kicked off our conference with Michael Saylor, a.k.a. the Bitcoin King. He really made a strong case that more companies need to have Bitcoin on their balance sheets. Do you have Bitcoin on the balance sheet of the Trump Organization? And if not, why not?
We have a ton of it on the balance sheet. I'm incredibly proud of that. I've got a ton of it on my own personal balance sheet. And, and obviously I'm going all in terms of American Bitcoin. I mean, we're setting up the greatest Bitcoin company in America, listed on the Nasdaq, ABTC, using Hut 8's infrastructure. Asher is one of the best people in energy anywhere in the country, anywhere in the world. And we're mining it, as I said before, for roughly 50 cents on the dollar. There is no one doing it that's better than us. There's no one that's doing it with more passion than us. There's no one who's doing it quicker than us. Listen, we've been listed for under 3 months at this point, and every single day it seems like we're passing another company, and these are major companies that you know about. And so we're climbing that ladder very, very quickly, and again, our success thus far is beyond incredible.
Asher, let me get you into this conversation. Just before we came on, we had Mark Palmer really make a strong bullish case for your company and what you're doing. For those not familiar, where is your infrastructure situated? And then day to day, what do your operations do?
We run sites all across North America. We have sites in Texas, we have sites in New York, we have sites across Alberta and across all of North America. Our sites are split up in power generation, so we own power plants, and also data center capacities. Data centers that power Bitcoin and the network that everyone relies on in order to securitize Bitcoin, the asset, and then also sites that we're building data centers for that are powering AI use cases as well. We're a believer at HUT that energy is the fuel that powers all future technologies, and we want to be in the center of technology and power.
Asher, you're building a pretty substantial site, I believe, in Louisiana. Do you have a tenant for that yet?
We have not announced the tenant for that yet, but as everyone knows, power is extremely scarce right now. It's a really large campus in Louisiana with near-term power. And so we'll share more about who's going to go there in short order, but we've already started moving ground, construction on the site, and building a lot of the electrical infrastructure.
Meta's nearby, Asher. Is it Meta? I have to ask.
We haven't shared who it is, and we will soon.
Fair enough. Look through, seen through your prism, we've been talking all day long about an AI bubble. Is that talk ridiculous?
I think in any large scale wave and systematic shift, you're going to see building. And I think people are saying, how much money is going into this infrastructure? Our belief is AI is going to fundamentally change the way that we operate in the world, the way that normal people transact, how they transport themselves from location to location, how they work in the workplace, at home. And so we think AI is just at its beginning innings of its impact on the world and on society. And in order for that impact to happen, we need to build data centers to power that compute. And so the question is, are there too many data centers being built? Are there use cases already happening? People need to invest today for where the future is going. And so we think we're still at the beginning of that investment cycle and that integration into what AI is actually going to do for the average person.
Are there too many data centers being built?
We have not enough data centers being built. We need more power generation in the US, we need more transmission, and we need more data center capacity.
Eric, let me get back to you here. How do you see crypto changing the future of the financial services industry?
Well, first of all, I think it's going to onboard trillions of dollars into the U.S., right? That's happening every single day. No country wants their own home currency other than obviously the U.S. dollar. No one wants a euro. No one wants the pound. No one wants any of the Asian currencies. Guess what they want? They want the U.S. dollar, and so you have stable coins every day that are bringing trillions of dollars every year. That's bringing trillions of dollars onto American shores. You're going to see more and more of that happening. Second of all, the speed of finance is going to go up. There's not going to be waiting, 36 hours, 48 hours over the course of a weekend to be able to send out a wire transfer. That's going to become instantaneous. Fees are going to go down. Convenience is going to go massively up. So much of the blockchain technology is going to tokenize assets. We're seeing that every day. In fact, some of our buildings are being tokenized for the first time. And I think you're going to have this major shift to Bitcoin as truly the digital gold. I think you're seeing more and more money that will ultimately come out of gold, and you're going to see that ratio disproportionately shift into Bitcoin because it's been the single greatest asset that we've seen, and it solves a lot of the problems that physical gold has, including weight and transferability and so many other things, right? The ability to monetize, speed of monetization, and so again, you're going to see crypto literally change every aspect of our financial system, and it couldn't come quickly enough. I think we're wholly behind. The banks have been antiquated for too long. The banks have frankly been the monopolies that actually have been a disservice to ordinary people who don't have maybe the Trump last name and don't have a lot of zeros on their balance sheet, who get zero advantage and have been put at actually a massive disadvantage. And there's no question that every single day you see another widget popping up on your Amazon cart being able to transact in either Bitcoin or stablecoin. Crypto is here to stay. Crypto is the future of finance. And American Bitcoin, in terms of what we're doing, being able to mine it cheaper than virtually anyone, we are going to lead the way. We are going to lead the way, and America is going to lead the way, which makes me incredibly happy as a person who loves that flag right behind my shoulder.
Eric, the crypto industry it's still volatile, and look, we're right in the middle of the latest sell-off in Bitcoin. What do you think about this sell-off, and what do you tell your investors and contacts when prices do come off the highs like this?
I laugh. Honestly, Brian, I literally laugh because it's almost like not a serious question. Again, back to what I said before. Bitcoin exactly 2 years ago today was at 36,500. And what are we sitting at? 102, 103, 105. We're dancing in that region. It's up to, we were at, well over 120. So you had almost a 200% return in a 2-year period of time. And then people talk about the volatility of Bitcoin. Hey, I'll take that volatility. Give me more volatility if I can get more return. And I think that's how crypto people are wired. And if you can't handle volatility, stay out of cryptocurrency and don't bother. But go into treasuries where you're going to have zero volatility, and you're going to click away at 3% returns. Go have a great time doing that, and I'll see you in 10 years. Embrace volatility. Embrace the future. It's clearly happening. It's not just happening in the United States. It's happening globally, everywhere. I just spoke at a conference in Hong Kong. We had 25,000 people there watching Asher and I. It's happening all over the earth, right? This is here to stay, and I'll take 200% returns in effectively a 2-year period of time, anytime, and have to deal with a little volatility. Sign me up. That sounds like the greatest investment you could ever have.
Eric, when we talked, I believe maybe more than a month ago at Trump Tower, what I didn't appreciate was how fast sovereign wealth funds are moving into crypto. From your vantage point, what are they doing, and what are the actions they will likely take next year?
Yeah. Well, listen, I think they look around the world and they see, how unfair some of these countries are to their individuals. Look how many bad currencies you have out there. Look how many corrupt governments you have out there. Look at how many antiquated banking systems you have out there. It's almost developing countries almost need crypto more than the United States does, as crazy as that sounds, because it kind of cures all the problems that they have based on the fact that they don't have kind of modern financial systems. And so sovereign wealth funds are seeing that, and they're buying into it. I've had people who run major sovereign wealth funds tell me that they're taking, and most of them are governments, they're taking all the energy from certain cities in the middle of winter when they don't need to use it to cool their office buildings, commercial buildings, and using that to mine Bitcoin, right? And putting unthinkable amounts of money into cryptocurrencies. People understand that this is the future of finance, and they are embracing wholeheartedly. And by the way, this is happening in the UAE. This is happening all over the Gulf regions, all over the Middle East. This is happening all across Israel. This is happening by certain countries in South America who are literally, adding it to their national stockpiles, most specifically Bitcoin. The passion for cryptocurrency and Bitcoin in Asia is off the charts. Look at what Korea is doing right now. Look at what Hong Kong is doing right now. Look at how Vietnam is opening up right now. And so this is happening across the board. And as I said before, it's here to stay, and it is going to modernize every aspect of our financial system. It's going to make it cheaper, faster, substantially more transparent, and a hell of a lot fairer to the end user who's traditionally, and I hate to use this word, gotten screwed by the big banks, including yours truly, who was probably the most debanked person in American history for doing absolutely nothing wrong.
Asher, let me get back to you. I don't know if you saw this, but earlier this week, CoreWeave got dinged. Their outlook wasn't that great, in part because of a delay in building, I believe, an AI, a data center. As someone putting these things in the ground, how difficult is it to get up and running an AI data center, and how long does it take?
The timelines to build a data center historically have been 2 to 3 years. People are trying to build them in 12 months today. And you have to rethink how you build these assets. Instead of stick building on site, maybe you skid the design and you bring it so a lot of it happens in a factory. You have the labor to support you on site in order to run double shifts. And so in building the speed, I think at Hut 8, what we're really grateful for is we used to build data centers for Bitcoin in less than 6 months. And so the infrastructure stack is more complicated, but we have this mentality and this ethos in the company to build quickly, to think about how to innovate around the deployment of these assets. And so the first question a lot of these companies had is, can you sign a contract? The next question, which we're starting to hear, is, can you build it, and can you build it on time with the customer? And are you over-promising to them? Or are you able to actually deliver to them the schedules that you've aligned with? The other element in these large mega projects is a relationship between the customer and the developer, and making sure that everyone works in lockstep to make sure that answers are given on time so you can move at the speed that you need. And so across the board, I think expectations need to be set with investors between partners, and then you can deliver projects on time and under budget.
Asher, your company gets high remarks for, I don't know how else to put it, but not taking or signing crap deals. I mean, I imagine you're getting a lot of calls to work with you in some capacity. Why is that so important at a moment like this when the AI industry is going through the roof?
We've had deals that we've walked away from and we could have announced and I think would have done well for our stock performance short term. But we believe in the value of power long term. We believe in the scarcity of that power, and we've seen that come to reality. From 6 months ago to today, you see demand continue to rise. Right now, it's peak demand. Everyone needs these assets, especially at these timelines, and we're seeing the deals get better and better. And I think we are very open and honest with customers on what type of deals we're looking for, why we think those are fair deals, and we will hold to that. And we don't need to announce a deal for the sake of the deal. We're investing in long-term assets. These are 15-year contracts, and we want to make sure whatever we sign today that we're happy about 5, 10, and 15 years from today as well.
Eric, let me get back to you here. How do you think the crypto industry will look different after President Trump's latest term? Of course, your dad.
Yeah. Listen, Brian, I mean, I think you kind of parted the sea, right, when it came to crypto. You know, you had an administration in the past that was just anti-crypto, anti kind of progression of the financial industry, and they did everything they could to possibly stop it. My father's completely reversed course on that, and America's leading the way. What's happening is as America leads the way, as he parts the sea, everybody else is kind of following behind, right? So all the Asian countries, obviously all the Middle Eastern countries are all following behind. They're using America's framework as kind of the framework, you know, that will give crypto guide rails in all of their respective countries. And that allows everybody to embrace it in a way that has never happened before. It's kind of hard if America's sitting on the sidelines poo-pooing something for so many of these other smaller countries to embrace. Now they're fully embracing it because America is embracing it and America is leading the way. They want to follow us. You know, they've always wanted to follow us in just about everything we do. They're also following us in terms of this AI revolution. They're also following us in terms of, you know, so many of the kind of energy procurement things that we're working on, you know, as a country. And again, that's beautiful. So I think you're going to see the crypto industry massively change around the world. And I think it's going to be one of those things that's growing so quickly right now, you can't stop it. There's no one that's going to turn the ship at this point, and certainly not in a 3-year period of time, you know, when it only progresses even further. And this is the new standard. America's going to be very proud of it. America's going to lead the way in it. And I think Donald Trump has a very big role in that, because this was not happening 9 months ago under the last administration. In fact, the exact opposite was happening. Crypto companies were leaving the United States. They weren't fleeing to the United States.
Eric, of course, we're having this conversation a day after the government shutdown ended. And look, we could talk about who's right and who's wrong, whatever the case. You know, I've talked to a lot of CEOs here today, and they're frustrated. You know, they want to keep running their businesses and planning and driving corporate profits. Like, how do these shutdowns eventually end, or is this just something we're going to have to deal with?
Hey, I'm frustrated. But believe me, it affects me too. I'm frustrated. You had every single Republican voting to open up the government, and you had Democrats, because they have no platform. They've got no message, they've got no leadership, and they've lost horribly badly for the last 5-year period of time, doing anything they can to be absolute obstructionists. And it is sad. These are people's lives. This is the GDP of the United States of America. I walked through Charlotte Airport, 2 days ago, Brian, and it was a nightmare. I'm watching kids fall asleep on their mom's lap as they're sitting on a floor because the terminal's so busy from delayed flights and everything else. It's not right. It's not right that air traffic controllers can't get paid, people who work their butts off and provide a great service to this country. None of this is right. None of it's fun. And then I get to watch AOC out there, talking about how she would have kept it, closed indefinitely if it was up to her. And how dare Chuck Schumer actually have the gall to try and reopen, the greatest economy anywhere in the world. These are not serious people. They're not the Ashers of the world. They're not the me's of the world. These are not serious people. They don't have to live with the ramifications of what they do. They're just willing to obstruct Donald Trump at every single turn, and our country deserves a lot better than that. So I feel for those CEOs, and I'm one of them. I agree with them 100%. Let us do what we do best as entrepreneurs and capitalists in the United States of America, and no one stands a chance.
Eric, do you see yourself running for the presidency at some point?
Brian, it's a terrible profession. I can tell you that much. I've seen the best parts of it. I've seen the worst parts of it. I can tell you, I don't wish the worst parts on your worst enemy. We were the most attacked family in history. We were the most debanked family in history, never for doing anything wrong, just because they wanted to try and take us out. In fact, I just wrote a book about it called Under Siege, and that's what they did. They put us under siege. They put our nation under siege. I became the most subpoenaed person in American history, again, having never gotten a speeding ticket in my life, because they wanted to try and get to my father, and they want to try and take out our family and silence our family and gag our family. That's a long way of saying, I hope I probably never have to. It was so bad, and I had the right voice at the time, and I understood the trials and tribulations of our nation. I think I certainly could. But again, I've seen the worst of it. I've certainly seen the beauty of it. You can do great things. You saw that with my father in Middle East peace. This is something the Democrats could have never done. This is something Joe Biden could have never done. So there's beautiful things that come out of it, but at the same time, it's a rough world, and you better have a family that's prepared, and you better have the fortitude to go in there and go to war every single day, as my father has done for the last 10 years.
Asher, let me get one more word to you before we wrap this conversation. For investors that are investing in your company, or for folks that want to put money to work in a Hut 8, 2026, what is your big initiative, and what does success look like?
Continue to build data centers, powered infrastructure, continue to support American Bitcoin and their growth on Bitcoin mining, continue to support all of our AI customers. You'll see us build generation around data center capacity, both of all kinds of compute, from AI compute to Bitcoin compute. And so Hut 8 is a company if you're long energy, American Bitcoin is a company if you're long Bitcoin.
Well, good luck on the road ahead. Eric Trump, Asher Genoot, good to see you guys again. I greatly appreciate you coming. Thank you, guys.
Thank you.
Thanks, Brian.
Let's start on Bitcoin, because we hit 126, all-time high in October. We're down about now 22% since then, John. Explain this move to us. What's going on here, and what do you think comes next, near intermediate term?
Well, in terms of short-term price movement, not to be trite, but more sellers than buyers, right? That's ultimately what happens. So I try not to, we as an exchange care about price discovery and efficient price discovery and value transfer, and not so much causality behind short-term movements. But I'll remind everyone that this is an asset that is up an extraordinary amount over the duration of its lifetime. Year on year, we're still looking at, haven't done the numbers yet, but probably looking at 35, 40% year on year return, even with the drawdown. The ability for an asset that has as much upside as Bitcoin to periodically have these types of price corrections or mean reversions, however you want to phrase it, it shouldn't be surprising. So throughout I think I've not been on your show, but all the shows I've been on during the bull run, the advice is the same. Dollar cost averaging into volatile assets is smart. If you believe in the thesis, buying at a discount in a consistent, sober, thoughtful way also seems smart.
Mark, let me get your thoughts. Same question about these moves we're seeing. I should mention, so Bitcoin down 22% from that all-time. I'm just saying Ethereum's down 35%. Solana's been cut in half. What do you think?
Well, I think one of the things that's been overlooked is the fact that back on October 10th, we had what was effectively a cataclysmic event for the crypto market that the mainstream may not have picked up on, but we had a flash crash. And in that crash, we saw about a quarter of the crypto market makers go out of business, which if you think about that, translate that to traditional finance, that's all you would hear about in the news. But as a result of that, we are seeing some healing that's going on with regard to the liquidity in the market. And at the same time, one of the big catalysts for crypto is the potential signing into law of the Clarity Act, which would create a regulatory framework for crypto. Well, the U.S. Senate was not going to be taking that up when there was a government shutdown going on. So you had a confluence of the larger macro with a crypto-specific event, and here we are, quite a bit lower than where we had been a month ago.
Dan, here's a simpler question, but honestly, it's a question I will get from friends and family. They'll say, what is Bitcoin? What is its point and purpose? One school of thought, I've had guests on the show who say, don't overthink this. It's digital gold. It's just a hedge against fiscal irresponsibility here and abroad. Is that how you see it?
I view this more as obviously, I think it's more of a risk asset than most people give it credit for.
Why do you say that, Dan?
Because it trades down a lot when markets are volatile, right? So I think those movements, that volatility, you see something that trades down or up so much, so quickly, and it's gone up so quickly over such a short period of time that to me is the epitome of a risk asset, more than people give it credit for. That being said, it's a VIX on the Nasdaq. If you think about it like that and you don't overthink it, if you believe that we're headed to a great place and we have our sort of official price target for Bitcoin and it's going up, then it should
What is that
outperform.
official price target?
I think when we cover MicroStrategy, so we have to have an official price target. I think we're like close to like 150 by 2027. That's kind of when we published our note on MicroStrategy. That was our sort of official stance of where it's headed towards.
John, here's a question that came up today at Invest. Will Bitcoin ever be as big as the gold market? We talked to Michael Saylor. You might not be surprised that Mr. Saylor says yes. Here's what he says. He says Bitcoin will be a larger asset class than gold. Puts a year on by the year 2035. What's your reaction to Mr. Saylor?
So he's a very smart guy. And I read his analysis of why that would be the case. He's tying it to the virtual end of Bitcoin production. And the fact it will take 100 years to produce that the incremental 1%. He's not wrong that in terms of, if you look at other assets that are priced by the marginal unit of production, like say crude oil or natural gas, it's not uncommon for those assets to spike up when that marginal unit of production gets more scarce. So if that extra barrel of crude oil coming out of the ground is bid after, then crude oil prices will go up, regardless if there's 1 trillion gallons under the ground. So his analysis is thematically reasonable. Hard to tell what's going to happen, but I view Bitcoin as complementary to, as opposed to a replacement asset for gold.
You could own both.
I'd own both. I mean, in terms of the look, long-term inflationary hedges are difficult to figure out, and most large investors have not figured them out. So you can dollar cost average the global economy over time. That would be some type of inflation hedge, or you can try to pick a basket of assets that you think will perform well. Most funds that have looked at that problem, when they run the analysis, Bitcoin is a part of, maybe not the only asset, but a part of that asset. It incrementally helps inflation hedges over time because, again, it can be viewed as a hedge against money printing.
What's the risk? I'm listening to this.
Sure.
John, I hold Bitcoin. Yep. What's the risk it ever goes to zero?
If you think about the universe of things that would have to happen, what's the risk that the internet ceases to exist? What's the risk that the plumbing that interconnects us as a society goes away? So I hate to ever, look, crude oil went negative less than 2 years ago, right? The world's most important valued commodity. For a brief period of time, you had to pay someone to take it, right? So who would ever imagine that could happen? Obviously, it's not negative now. So markets can do really weird, crazy things. So I don't look at short-term price corrections when I think about the underlying thesis for why it should exist. The computational complexity that represents Bitcoin at this point, to unwind that completely, as well as the hundreds of millions of people who believe in it, is it possible, perhaps? Is it likely? No.
Mark, let's give people some investment ideas. All right, here's three as we head into 2026. You're telling clients, got three here, correct me if I'm wrong, Galaxy, Hut 8, and Strategy.
Yes.
Is there a theme or common themes that sort of join those together, Mark?
Well, with the first two, with Galaxy Digital and Hut 8, these are hybrid firms. Galaxy Digital is actually our top pick in the space, and that's because it provides two ways to win. The company's base, what it has built since its founding, has been an institutional platform focused on crypto. They're basically trying to build a merchant bank a la Goldman Sachs around crypto, and they've been able to get a significant first mover advantage as a consequence of that. So as we see institutional adoption of crypto increase, with the Clarity Act being a near-term positive catalyst in that regard, that business should do very well, as should the institutional platform at Coinbase. At the same time, Galaxy Digital, by virtue of buying a Bitcoin mining plant in Texas, back in December of 2022, when we had just seen the FTX collapse and people were thinking this was the end of crypto, they bought this facility for Bitcoin mining. As it turns out, it was convertible into an AI data center. And so now the company is sitting on 3.5 gigawatts of capacity in Texas. It's already signed contracts for the first 800 megawatts with CoreWeave. And the value of that, according to our sum of the parts, is, at least at this point, greater than the value of the institutional platform. But you put the two together, and there's an awful lot of upside. Again, a couple of different shots on goal.
Dan, those are Mark's picks. When clients are asking you top ideas heading into 2026, what are you telling them?
Robinhood is kind of the, I like two names very much, and there's another name that I want to mention here as well. So Robinhood is kind of your quintessential killer app, right? I know the price has been up a lot, but I think you just had Vlad on TV here for a long interview before that. They're just a machine. They're going after a $600 billion plus TAM. Today, they're less than 0.5% of that TAM, and they're going to 10x the company. So that means this could be like a $30 billion revenue company in a few years, not that far along. I also love Affirm.
Why do you love Affirm? We had Max on as well.
How could you not love Affirm? I love my wife, and I love Affirm as well. don't get me wrong. My wife and my kids, and then Affirm, in that order. But
why is Affirm a buy here? Strong buy.
Because the TAM, the total addressable market for Affirm, is literally unlimited. What I mean by unlimited, it's basically all of credit, and they're offering a way for young people, and not necessarily poor people, but young people that don't like credit cards, don't like to revolve credit, to basically take a loan, like pay as you go, right? And I do also want to mention eToro, which we feel like is in an inflection point, right? The moat of eToro is much stronger. The valuation is a fraction of what Robinhood is. And you saw in this quarter that they reported, it's starting to gain momentum. So I think that's kind of the value play in the, let's call it like high valuation stocks.
I saw, Dan, I just want to ask you, I think I only saw one sell in your coverage universe. Correct me if I'm wrong, but I think there's only one underperform. Is that Circle?
Yeah.
Why is, and I know sometimes you have sells, maybe sometimes you do, yeah. Sometimes you have strong sells. Is this a pound the table sell?
This is like a sell with a vengeance.
With passion?
Yeah, with
passion.
All right,
why the passion on Circle?
We initiated, it's actually good, I'm very glad you asked this, but we initiated, I was just looking at it today. The stock was at $207, and everyone was drinking the Kool-Aid, the stablecoin Kool-Aid, and we're like, it's not worth that much. It's a great company, but it's not worth $207. We put an $84 price target, and if you look at it today, it's actually, touching our price target, back and forth. Rates are coming down. Their circulation is not going up much more beyond, like sequentially the circulation of USDC is like in the mid 70s. And they have to pay more and more for partners like, our esteemed partners here at Coinbase and others in order to get the stable coin. So it's like a buyer's market, not a seller's market. So we still think there's obviously like more bad news to come on that front, and we're pressing the sell on that one.
John, let me ask you this, because we were talking about catalysts for crypto. What are risk crypto investors you think have to think about broadly in 2026? Is it leverage, John, regulation, custody risk? What should I have on my radar?
So the macro thesis, quite frankly, looks good. I mean, and I know the price action recently hasn't been great, but we're looking at massive regulatory unlocks. Under the radar was a recent IRS unlock, where the IRS came out and provided real clarity on tax issues around crypto, which I think was a underserved point. We've got massive increase in institutional adoption, Coinbase's announcement of Citi partnership, JP Morgan using. So I think there's going to be periods of peaks and valleys, ultimately. So again, the idea of trying to time the market, I think, would be the biggest risk. Because a sober dollar cost averaging approach, given the regulatory unlocks, given the increased institutional growth, seems smart. But I think, to answer your question fully, I think market timing and avoiding trying to market time would probably be the biggest risk.
John, you might have line of sight here. Who owns Bitcoin right now? I mean, is it Josh? Is it institutions? Do we have a good, know what the breakdown is?
So there are charts floating around. Depending on whether you view BlackRock as a single institutional owner, which I don't, because their sales come through people buying via the ETF. You'll see numbers saying that the majority of Bitcoin is now institutionally owned. There's been recent selling from large old owners of Bitcoin. So I think the general thesis is it's moving more institutional, but again, you have to unpack the nuance of that. The ETFs have been extraordinarily popular. And so I view ETF as retail ownership, even though it's coming through an institutional wrapper. So I think we're looking at about roughly 50% ownership of institutional versus retail.
Mark, I'll end with you. Obviously, no surprise, one big theme we're talking about today, all things AI. When clients ask you, Mark, help us understand how AI and crypto intersect now and looking ahead. How do you explain that to them?
Yeah, well, I just gave one example with Galaxy Digital. Another is HUD 8, which is a company which has had as its basis Bitcoin mining, and then was able to evolve into a hybrid company that also had AI data centers. What is the common denominator there? Energy. It's the energy underlying this, which is really the key underlying theme, that if you can harness that energy, collect energy-related assets, then those can be allocated to Bitcoin mining, to AI training of large language models, or whatever the next technology is that comes along. So I think that as it pertains to AI, and I'd say this for crypto as well, you really have to be open-minded and flexible at this point because we're so early. Even crypto, we just had the 17th anniversary of the release of the Bitcoin white paper. Bitcoin is not even an adult yet. It's still a teenager. We act like we're in this next stage of institutional adoption when really, we're in a very nascent period. With regard to AI, yes, there were folks who were talking about AI a few years ago, but not like now, not with the kind of intensity that we've been seeing. That's going to be going into directions that we cannot foresee at this point. So it really is important to be flexible, to follow the trends, and to be open-minded, and to find those common denominators, such as energy.
As one guest put it to me today, he thinks AI, we're not even in the early innings, we're still in the batting cage. There you go. Fellas, great discussion. Thank you so much. Appreciate it.
Crypto exchange Kraken will be marking its 15th anniversary in 2026, making it the veritable granddaddy in this still young industry. The market has gotten a lot more crowded in that time and more established. With more on where the industry is going from here, we're joined by Arjun Sethi. He is Kraken co-CEO. Thanks for being here, Arjun.
Thanks for having me.
I do want to ask about price first, because there is some interesting price action today. We've seen Bitcoin fall below 100,000. How closely do you watch the prices, and how much is traffic on your platform correlated to the price of Bitcoin and other cryptocurrencies?
Yeah, just like any other asset, the more it goes up, there's speculation around it, so people get interested in it, and then they try to buy the asset. When it goes down, you tend to get a little bit more negative news, but that's across every asset class, crypto, ETFs, stocks, shares, et cetera.
So are you concerned at all that with that volatility that, that there is this drop in traffic, and how long do you think that this drop in crypto could last?
Yeah, so for our platform, we have over 400 plus crypto-related assets. We have all of the stocks and ETFs in the United States, as well as some international stocks that are going to be on the platform soon. So for us, it's across the board. One thing I think that's important is if you just look at the general slope of crypto, Bitcoin from 6,000 to 15,000 to 25, back to 8 to 50, back to 16, then 80, et cetera. You always have these curves that have continued to change for all asset classes. And I think what's much more important is what is the thesis behind why you'd want to buy Bitcoin or Ethereum or any of these assets versus hold a dollar or any other shares.
And do you think that sort of philosophy or reason for buying it, that is going to expand regardless of what happens to the price? Yeah,
there's going to be micro and macro cyclicalities across all jurisdictions. So the U.S. perspective is that we'll take a look at traditional markets, but we're in Australia, Canada, United States, UK, Greater Europe, et cetera, and then the rest of the world. All of these markets, in some cases, they don't have access to their own equities markets. So they're looking to buy assets that they consider safe. Most of the time, those assets are US assets. And crypto is one of those as well. So Bitcoin, Ethereum, the alts, Solana, et cetera, become sort of more synonymous with safety over time. And then the next phase of safety has been US treasuries, which are stable coins, and then tokenized equities have been like a huge boon for us and other platforms as well, which is essentially similar to US treasury as an asset that's safe. People want access to McDonald's, S&P 500, NVIDIA, et cetera. And I think that's great because you're leveraging the global liquidity, global access, global distribution through any global platform out there to be able to get access to these assets no matter where you are in the world, no matter what platform you use.
I do want to get more into tokenization, but first to kind of take a step back here for people who aren't as familiar perhaps with Kraken. You guys have a lot of traffic internationally as well. There are a lot of crypto platforms now. As I mentioned, you guys have been around for a long time, but there are a lot of crypto platforms that are accessible here in the US, and we're seeing an increasing number because existing platforms like a Robinhood, for example, has gotten more and more into crypto. So how should people think about Kraken? What is the identity of Kraken versus some of those other platforms?
Yeah, so I'd take a step back in that the TAM is large, right? The total addressable market around how to get people access to these financial products in the first place. So over time, you've seen a lot of these fintech companies just give broader access, underbanked. You have neobank services, et cetera, sort of converging on giving people access to any type of yield or savings. So the way to sort of think about it is you have all this open access. We talk about open internet, open banking, et cetera. Well, worldwide, that hasn't really happened that much. And so the first new movement worldwide in terms of distribution is mobile phone, access to internet, and now global internet capital markets, which is essentially crypto. And then you're moving assets into that. And so we've been worldwide since day one. We've been fully remote since day one. So it just gives us access to a larger pool of customers. I think what has always made us different, frankly, is outside of core features is our culture. So what do we stand for? We stand for your property and your money is yours. It's your sovereign property, similar to how we think about our own freedoms and assets here in the United States. We want to be able to bring your assets, similar to how we think about crypto, is like it's interoperable. You can move it the way you want to. If you want to opt into a program that gives you a certain amount of yield, then you go to who you trust. And so we're vertically integrated in that way, which is we're an exchange like Nasdaq, and then we have an interactive broker-style platform for you to be able to use our products to be able to buy any of these assets that you want. And so crypto is where we started. Crypto native is how we were born. But those principles are what carries us for all the other products that we give access to. So, a lot of people talk about financial inclusion. I think of it more as how do we get more and more participants to get into the ecosystem. Crypto is the rails in the back end for us, and in some cases it's freedom to do whatever you want with your money. But the ability to have freedom to do what you want with your money is to be able to have forward mobility in the first place. So at a time where we're talking about, how do I participate in the capital markets. We're talking about socialism in some cases. What do I actually get for my money, and who are the services that I use? I think the traditional institutions are capped to high net worth individuals and larger folks that have pooled capital for better products. We want to bring all of those products to everyone worldwide.
You guys also have expanded more into the retail side. You bought a company called NinjaTrader earlier this year. Historically, you had been more a home for maybe professional traders. And again, this is an area that some of your competitors are getting into more. Coinbase, for example, is leaning more institutional now. Mm-hmm. So is that a threat for you guys? How do you think about that competition?
Yeah, I generally don't like the terms when people say retail or institutional. It's as if you're pitting people against each other. And so, what does the average consumer do when they're starting off, like as an entry point? What does someone do when they're, in their midlife of their career? And then what does a high net worth individual do? Like that's the aspiration for everyone, right? Like whatever your asset might be from your job where you get paid a salary plus a bonus and maybe equity depending on how you work. And so worldwide, these things are changing. And so the way in which we categorize our customers is that we started off with an exchange for active traders and professional traders worldwide. They eat the same, they think the same, they read the same, they were educated the same. Purchasing power parity is very similar worldwide. They're the basis and the strength of our liquidity, our global platform, our rails, and they just give us the ability to create all these products for consumers. And so, traditionally people will say retail, but I think of retail as like this transactional model of an individual. It's like, what do you care about? What do I care about? What will my kids care about? And so it's consumers on their journey, and then we build a separate set of products for them that are powered by our liquidity engine or Kraken exchange. And so the interface is different. So we have a app called Kraken, which is for sending, receiving, and getting yield, similar to how someone who is a high net worth individual would get. So if you want a 5% yield, hopefully in the future 8 to 15% yield, instead of having millions of dollars to get access to that product, you can have $5,000 or even $1,000. And then for our institutions, what they really care about is custody, safety, security. So we offer a lot of these yield products. So the DATs that we all hear about in the public markets, we support them.
Digital asset treasuries.
That's right. The companies that want to buy and hold on their balance sheet Bitcoin or Ethereum or any alts, we support that too. And then there's these protocol companies that are listing their tokens, we support them as well. So this is not any different than banking and financial services and the institutions that we're used to. We are building institutional products, but they are supported by our customers in the first place. And we consider, as a part of our ethos, free and fair and level playing field. So a professional trader, a consumer, or an institution, when they come onto our platform, they're able to trade, store, save, get products all at a equal access.
You mentioned tokenization a little bit, and I know you guys have a tokenized stock product outside of the U.S. called X Stocks, right? How is that product doing, and do you have plans to bring it into the U.S.? I mean, the sort of use case where it seems more logical outside of the U.S. So talk me through how you guys are thinking about that.
Sure. So similar to stablecoins, we built out our platform called X Stocks, or it's tokenized equities. It's permissionless. It's across multiple chains today. So Solana and ETH are the two main ones where we launched, and it's available worldwide, including most of Europe. Not available in the United States yet, but we're hoping that changes over the next coming months to years. The way to think about it is, again, as I'd mentioned before, people want access, no matter where they are in the world, to what I call safe assets or growing assets, and it's either a hedge against inflation or they want to be able to have forward mobility. So if you're a shopkeeper in Latin America and you want access to the S&P 500, you have access now. And if you want to get yields for it, you can do that as well. But I think what's more important is that there's global distribution of getting people onboarded into the U.S. capital ecosystem. What's really great is you have more people participating, you have more liquidity in the ecosystem, you have more owners worldwide that sort of think the same way we do here in terms of what our U.S. capital values are. And that ends up being really great. And so it has become one of our fastest growing products. I think we just passed 10 billion in transactional volume on a tokenless, permissionless platform. And it's not just available on Kraken. It's available on the Phantom Wallet. It's available on a Solana DEX in any of these markets. And so I think what's really great is, like, while we're creating our product, we don't also want to force people into a walled garden where they say you can only buy equities with us, you can only buy crypto with us. If you buy with us, you can move it to a wallet. If you want to buy from another wallet and bring it to us, you can, as long as our banking and financial services support what you want. That's what we're there to do in terms of their workflow.
I want to ask you about regulation, particularly here in the U.S., because Kraken's not available in every state, and not all of your services are available in every state, in part depending on particular coins that people.
We're available in all states but one.
All states but one. What's the one state where you're not available?
We're still not available in New York today.
New York, which is where we sit right now. So do you think that's going to change? And do you, as I said, even if you're available in all states, there are certain things that are not necessarily available in all states. Do I have that right?
No, we're available with about 99.9% of all our products in all states.
Do you think New York's going to change? And do you think in general you're going to see more loosening of regulation here in the U.S.?
Yeah, I don't think it's about loosening of regulations. This is kind of the sort of the proverbial thought, is that if there's any change in the way in which regulations are structured, that you're not protecting the consumer, right? Consumer protection is at the, like trust, safety, and consumer protection has to be at the forefront. And this is very similar in Europe. And so a lot of the conversations people are having now are, how many disclosures or, like the cigarette disclosures that you're going to get cancer, do you have for products that are actually meant to give people forward mobility? And I think a lot of the discussions we're having is, okay, well, what are the types of financial products that you can get out to people? And so in New York specifically, I can't speak to like what they're thinking, but in the United States, we had the Genius Act, which is around legitimizing one-to-one backed treasury yields into stablecoins. And then the next phase is going to be what people call market structure, or the Clarity Act that passed the House, which is like what are the ways in which you can get financial products now through the exchanges into the United States. And so once that happens, I think what's going to be great is it'll be a flood of innovation, a flood of capital, a flood of products that can come in and actually start innovating with us, not just one or two companies.
Finally, I want to ask you, you might have seen the headline that Grayscale filed for its IPO today. There's been a lot of crypto IPOs this year. What are you guys waiting for?
Look, I think the best way to run a company is to be prudent and disciplined, first and foremost, and also who are your customers and who do you cater to. So we've got 3 large constituents, and what we want to be able to do is talk to them about we're financially sound, we know how to have our own risk management on how we run our company, we have enough capital on our balance sheet today as a private company, and that we don't race to the door as quickly as possible, the fear of missing out because everyone else is doing it. And so I think what's good about these companies coming out first is that they are educating the market on what's good and what's bad, what margin looks like, how do you make money, et cetera. I think for us, we're going to do it how we think about what public markets mean, in terms of access to capital or trust when our clients want it.
All right, thanks so much, Arjun. Appreciate it.
Thanks for having me.
I was going to go off on a different direction this interview, but I got an alert from Yahoo Finance. There's a story on our page right now saying you are delivering money two people's houses in partnership with GoPuff. Explain it to us.
Hey, Soz, great to be with you. So we're launching a service, Robinhood Banking. It's rolling out to external customers right now. Early feedback seems quite good. And the idea is, can we actually give you the private banking experience? So the same type of experience that a high net worth individual would get from a private bank, but with the digital experience they've come to expect from Robinhood. And as we started thinking about the types of features and services that the high net worth individuals would get, one of them is they're not going to an inner city ATM. They're getting cash delivered to their house. And surprisingly, even though we're getting increasingly digitized, cash is still a very important part of the US economy. And people need it from time to time. And when they need it, we want to deliver it to them with the convenience they expect from other digital services. So high net worth individual gets cash delivered to their house in a truck. We figured out how to do that in partnership with GoPuff to the mass market.
Vlad, how does this...
And that's just one of many features that I think make Robinhood Banking the best solution for customers.
Vlad, how does this come? Well, I haven't, full disclosure, I've not used this yet, but I'm curious about it. How does this cash come? Is it in a bag with a dollar sign on it? Like, how's it packaged? I've never had cash delivered to my house, is what I'm trying to say.
Yeah, we don't want to just deliver it to you in a shiny bag with a dollar sign. I think it's a little bit more discreet than that. Gotcha. But actually, one of the initial markets is New York, so I encourage you to give it a try.
Fair enough. Look, one of the benefits of doing an event like this, we can actually get in depth into your story, the story of Robinhood. Take me back to the 1997 Infiniti Q45, Vlad.
Well, that was a very nice car. It was a boat of a car. That's a deep cut. So I was a graduate student at UCLA, and my co-founder, Beju, and I put all of our belongings, including some servers, into the back of my Infiniti Q45. We couldn't afford to move with movers, and also plane tickets were quite difficult. So we drove across the country to where you're sitting now, New York City, and started our first company. This was a high-frequency trading firm in the absolute middle of the global financial crisis, where everyone was telling us that that was the worst time that you could possibly start, not just any company, but a financial services company. But the industry changed. There was a lot of disruption. Institutional finance went from kind of open outcry trading on the floor to completely digital. And then this sort of like set the seeds for us launching Robinhood many years later, where we basically combined the technology of high frequency trading with the new platform shift of mobile, and became the first mobile first zero commission financial company.
Do you still have the car? It's a bit of a historic thing, almost like the IBM garage or whatever that was?
No, unfortunately I don't have the car. It stopped running right around 2013, and then I sold it for about $300. So someone got a great deal in Northern Virginia.
Vlad, one thing inherent to your story, and you and I have talked about this a lot the past 18 months, but really this year it is the product velocity over at Robinhood. It seems like every day I wake up, there's something new coming from you and your team. Help us understand how you're able to get some of these products to market so quick, and how are you identifying new areas to grow in the space?
Yeah, I think that we've been fortunate to have spent a lot of time over the past few years building great infrastructure, both on the technology side, but also great people, great leaders. And we try to move fast and do so safely, because we recognize we're a financial company, and you want to make sure that customers have a reliable service. But I think we've been able to move fast while making sure that we do so safely, and it just requires having the right talent and the right technology infrastructure, which we continue to invest in. And it's not always the sexiest thing to talk about, but there were a couple of years, 2020 and 2021, where we didn't ship too many products, but instead we really got our house in order and built the foundations for the company you see today.
What's been the biggest game-changing product for Robinhood this year?
Well, I'd say the last quarter we announced that we had record net deposits, so 20 plus billion in net deposits in the quarter into the platform. And we already surpassed last year's record of net deposits with another entire quarter to go. We also announced 11 business lines, up from 9, that generate 100 million plus in annualized revenue run rate. The two new ones are Bitstamp, which is our institutional crypto exchange that crossed into the 9-figure revenue run rate, and also prediction markets. Prediction markets, which we've talked about, our fastest growing business of all time from a revenue standpoint, doubling quarter after quarter. And we also announced so far in October, we've traded more contracts at about 2.5 billion than all of Q3 put together. So that's been ramping extremely quickly. So I think I'd have to point to that one as the fastest growing. That's on the active trader side. But again, you look on the wealth building side, where we're not just building for active traders, but we want to be your primary financial account and your secondary financial account. You mentioned financial super app. Banking's looking really good. Credit card has ramped to north of 500,000 cardholders incredibly quickly, which makes us one of the fastest growing in that space. And Robinhood strategies in retirement have been ramping as well. So I'm proud of how the team's been able to build for these very different customer bases, active traders on one hand, but also becoming the platform that can help all of our customers, the mass market, with the totality of their financial needs.
Vlad, here's what Bernstein just said about Robinhood after your quarter. Quote, quarter after quarter, Robinhood management raises the bar and tells us why the stock deserves its valuation. How do you model a company that adds a couple $100 million revenue businesses every year? How could an investor model a business like yours?
Well, I think that we try to give our investors really leading visibility into how things are evolving. And as you could probably tell, even the way we're communicating with investors is evolving and improving. So it was less than a year ago that we did our first video earnings call, for instance, and we've improved upon that experience. The last earnings call was not only on video, but we had live video question asking from retail customers. We had sell side, buy side, and the media in the room, and it was in the Chase Center in San Francisco. So we actually did it at an interesting location. So the communication with investors, I think, has been improving, and it's a product in and of itself. In terms of the financial profile of the company, we keep it very simple. We want to grow revenues faster than costs. It sounds simple, but it's actually not trivial to do, especially at high scale. And we make big bets. We're not only content to improve the products we have incrementally and get a little bit better, even though that's very important, but we also make bets on new categories that you don't see elsewhere. And that led to innovations that are relatively unique to Robinhood in our space. For example, 24-hour markets on the active trading side, cash delivery, which you mentioned on the banking side, the deposit match products, which still continue to be unique, and of course, prediction markets as well.
I see a lot of what you're doing, Vlad, really trying to connect with the retail investor this investor has become way more sophisticated. Yet I look out through corporate America more broadly. I don't see a lot of companies doing video calls from the Chase Center for their earnings days. I mean, nobody's doing this stuff. Does that frustrate you? They're not taking the retail investor seriously.
Well, I'm seeing a ton of progress on this front, actually, and I'm working hard to make it easier for companies. I think you have to remember, most companies, when they think about their business, dealing with retail investors is pretty secondary or ancillary. They're worried about, making sure that They're launching products, and they treat investor relations, particularly retail, as kind of a chore or something they're forced to do. Our business is inherently different. Retail investors are at the core of not just our investor base, but also our customer base. And so we're kind of in a better position to take the lead here. But just last week, Opendoor, for example, became the first company outside of Robinhood to use our infrastructure to live stream their earnings to their customers. And we've had lots of others reach out. So you should expect that to be a growing trend in investor relations in the future. People are seeing what we're doing, and they're seeing that it's resonating with retail, and they like to explore and up level as well. Even you look at our IPO access offerings. When we pioneered IPO access to retail back in 2021, we were met with a lot of skepticism. You know, people would say, of course, Robinhood would do it. You're Robinhood, but why do I have to share a chunk of my IPO with retail? That seems like a bit of a strange thing. But now, after 3 years, 4 years, pretty much all of the major IPOs are in touch with us, and they're talking about how can they level up their retail engagement. And you've seen that reflected in larger allocations and better selection for customers. So I think it's a wave that's going to continue, and we're going to continue to do what we can to make sure retail is a first-class constituency for every public company.
You came out earlier this year, Vlad, with some very strong or robust long-term oriented growth plans in terms of numbers. Within those numbers, but since then, the crypto industry, it has even become more mainstream. The growth in these businesses, whether it's Bitcoin, various coins, have gone through the roof. 10 years out, how big is your crypto business?
Well, so right now, crypto at Robinhood is largely driven by spot crypto trading in the US. And it's, 20 to 25% of our overall revenue. I think the interesting thing is that crypto and financial services are going to fully merge over time. And that's kind of the bet that we're making. So traditional assets, right now we make a very clear distinction between our equities business, our options business, our futures business, and crypto. And also, cash management, banking, and credit card are separate. But more and more of these business lines are going to see crypto technology permeating their very fabrics. So you're going to start to see banking-like products that are stablecoin powered. And there's going to be some ambiguity about whether that's a crypto business or a TradFi business. But as the two fully merge, I think it's going to be a little bit more difficult to cleanly separate. I think it's going to become bigger and relatively indistinguishable from traditional finance, particularly as tokenization technologies continue to develop and become more mainstream.
Over the long term, Vlad, what business becomes bigger as a part of Robinhood? Is it crypto or is it prediction markets?
I think those businesses too are not going to be distinguishable. I mean, you look at prediction markets ex-US, it's generally on crypto rails. And in the US, where you have CFTC and NFA, they're being offered via traditional means. I think what's going to happen is outside of the US, the dominant way to invest or get exposure to US assets and later on global assets is going to be through tokenization and crypto technology, like you see with our EU offering. And then the US eventually will upgrade on the back end, but I think that it'll likely be a little bit behind just because we already have that existing infrastructure that's serving customers well. And I think that if you look out 10 years, we'd like to build a company where more than half of our revenue is ex-US, and sliced another way, more than half of our revenue is institutional rather than retail. So I think there's a ton of growth left in crypto, and also as it continues on an infrastructure layer with things like decentralized exchanges, perpetual futures, tokenization, as it continues to develop and mature, you're going to start seeing crypto eat the traditional financial system and continue to become integrated at a base layer.
Let's bring in Yahoo Finance's Ali Canal from the Invest Social Center with some viewer questions for Vlad. Ali, take it away.
Thanks, Brian. And yes, Vlad, we have plenty of questions from our Yahoo Finance social media viewers. Kicking things off from user Hedge Vision, who asks, do you have any other perks in store for the Robinhood credit card?
Oh, we have tons of perks in store. So again, we want it to be the best experience and in line with what you'd expect from a private banking relationship. So if you are one of the 500+ thousand cardholders for the Robinhood credit card, you're seeing great rewards, industry-leading cash back across all categories. And as banking rolls out, you'll see great travel benefits, an amazing travel portal, and I encourage you to check it out because more and more is coming on a monthly basis.
All right, so watch out for more there. And we have a two-parter here from AB. First question, as the entire world continues to shift towards AI, automated workforces, and robotics, do you see that as a threat to more traditional brokerage firms such as Schwab and Fidelity? And how is Robinhood positioned to be a winner in that space?
Yeah, that's a deep question. I think there's two views, two schools of thought about the impact of AI on society. One is that it's going to create lots of new jobs. So certainly there will be job disruption, but you'll see new jobs and job families and a flurry of entrepreneurial activity. That's the one that I happen to believe in. The other one is that the other view is that it's going to lead to greater and greater centralization, and maybe the handful of frontier labs that are building these models are going to aggregate more and more of the value, and they're going to try to build products and engage in enterprise deals that basically displace workers. So that's sort of like the bleaker view. I think regardless of which one of these you believe in, becoming an investor and getting exposure to the markets and AI companies in particular is going to be very, very important. And that's why we're pushing so hard on retail access to private markets in the US through various means. We think that it's going to be important for people to be owners in this AI technology in order for them to support it and defend it. Because AI right now, deeply unpopular. People are afraid of AI job disruption and how it's affecting their families and their livelihoods. I think a big part of that is they don't have skin in the game. You know, they're worried AI is going to take their jobs and give them nothing in return. And we're very focused on solving that problem in doing our contribution to solve it, which is giving private markets access to retail investors, particularly in AI companies.
Yeah, and we have been talking about AI all day. And then finally, for part two, with the great generational wealth transfer underway, how is Robinhood prepared to capture and manage these assets as a fully online platform?
Yeah, and that's a great question. So one of the benefits, one of the things that we're testing out and really leaning in with Robinhood Banking and the credit card in particular, is a first-class family experience. So we want to make it easy to bank, not just yourself, but your partner, your children, members of household staff that you might have. And that's really a first-class experience in our product, unlike other products. You should expect that coming to our brokerage and our wealth management products as well, to the point where it's going to get better for you when you have your whole family on board. So a lot of people think, well, Robinhood is just banking on young people to inherit all the wealth. That's not true. I think Robinhood is an amazing place for folks in their 70s and 80s even to keep their money and their investments. And we offer these amazing match promos. So imagine, you're someone in your 60s, maybe you're 5 years away from retirement. You might have $10 million in your retirement account. Well, when we run a 3% match promo, that's $300,000 that's instantly credited to your account, which is a very, very strong value proposition, particularly the older and wealthier a customer is. And we find that as long as you're digitally savvy and you're comfortable with using smartphone and web-based technology, our customers get served very, very well regardless of age.
Vlad, before we let you go, I was just talking to Max Levchin over at a firm, and I asked him, what does he do to de-stress? I mean, these are high-pressure cooker gigs. He told me he's a competitive cyclist. What do you do when you're not doing Robinhood? Like, what's your release point?
I like to go into the sauna. The sauna is sort of my de-stress zone. And it's quick, you know, 15 minutes, a couple of times a week. It's very nice. And the great thing about it, you can't take your phone in there. If you take your phone, I've tried, it's about 5 minutes before it melts down.
Vlad, please be careful. I want to continue to talk to you into 2026. Please be careful, dude. Good to see all the stuff you're working on over there at Robinhood. I appreciate you coming to invest. Thank you so much.
Thanks, Soz. Good to see you.
Thank you. My next guest is a tech entrepreneur and investor with an eye toward making the world better. For years, he's been at the forefront of tech revolutions and among the first to recognize value. He's been an investor in dozens of startups, including 40 unicorns. Those are companies worth at least $1 billion. Companies that come to mind include Opendoor, Instacart, HubSpot, Patreon, Filecoin, and Coinbase. Not to mention, he was the co-founder of Reddit and more recently has been investing aggressively in women's sports. Today, he is with me at Invest to discuss the biggest tech revolution of them all. That is AI. 776 founder and Reddit co-founder Alexis Ohanian joins me now. Alexis, so great to see you again. We've been talking about AI for this whole event today, almost 8 hours of this thing. At the same time, we've seen AI stocks hammered for really the second straight day. Where are we at in the AI cycle?
Oh boy, look, I think everyone is realizing this technology is here to stay. It is real. Now, I spend my days at the earliest possible stages of investing. I don't spend a lot of time dabbling in the public markets, so I can't speak to those valuations. But the bigger trend is very real. The innovation, the efficiencies that we're seeing, a simple example like writing code, something that I had to, teach myself when I was in high school. The act of writing code has gotten so enhanced thanks to this technology that it's changing the way apps are getting created. And so if you just look at that one very, very, very specific use case that obviously has a lot of value in the world, right? We can't live without software. We can see the implications for this. And so, I can't speak to those public market valuations. I'm still long-term very bullish on the overall technology trends. And I think one area where we've seen growth in the private portfolio has been around infrastructure-related investments. And so companies that are building on the hardware side, on in the world of atoms, but atoms that are in support of the bigger needs we're going to have around energy and compute. And just excited to see that. I think a lot of this technology can help us live much better lives. And that's the kind of thing we want to get behind.
Alexis, you've been early on so many things in technology. Take us through where you're seeing opportunity right now, like at the ground floor. I imagine things you're looking at right now may come to fruition 5-10 years down the line.
Yeah, I mean, I can speak to vibe coding. We seeded a company literally called Vibe Code that has really focused on mobile first, iOS and Android first app development, literally from a text prompt. Like my dad could, within a few minutes, build an app to solve some problem he has. They really believe, the founders do, that software development will get incredibly commoditized and that access to creating useful software, especially on your mobile device, will just look and feel fundamentally different than how I was taught as a kid or how generations of developers were taught. And that feels very inevitable and actually feels like a shift we'll see in the next 5-10 years. On the really extreme end, my partner Caitlin just backed a company called StarCloud, which is aspiring to build data centers in space. They actually recently just put the first one up there on a recent SpaceX launch just last week.
Data centers in space? How does that even happen?
And again, so to have basically unfettered access to light, so solar power that's coming through. You still have to solve a lot of problems with heat dissipation, which again, I'm not the physics expert here, but the founders are. And what's exciting is, if you want to build, and I think Elon recently, and maybe even Jeff Bezos were recently talking about the inevitability of data centers in space as a means to achieve these extra levels of a civilization where we get to become a spacefaring civilization, and we actually have these needs for compute so that we can, whether it's inhabit Mars, the moon, or any of the other things that are going on around there. In the short term, right, we're having enough growth here building data centers on Earth, terrestrial ones. But at the far ends of ambition, you have founders looking to build these data centers in space to help, create opportunities for using that compute out there in the constellation of satellites. And there's plenty of defense reasons and plenty of just human advancement reasons why this actually could be helpful if the science works. So again, we want to be the first check in a range of companies, from software, which I feel quite familiar with, all the way to, like I said, data centers in space. This is the kind of ambition we look for at 776, and it's exciting because, founders are, in a way that wasn't the case when I started Reddit 20 years ago. Founders today are very aware of the power of technology, and so many of the very best feel an imperative to build not just great businesses, but great businesses that are going to help push humanity forward. And it's inspiring. It's I'm on the other side of the table now. I'm just wiring the money. I'm not building the businesses like I used to. And so it feels really satisfying to be close to and inspired by founders who are doing just such great work.
Alexa, I think you and I are the same age. When did we become like the old guys in the room?
I know, dude. Geriatric millennial is when it really hit home. I mean, look, I'm 42. I have 2 young kids that keep me on my toes. But it's probably the best part of this job is you're constantly seeing a new generation of founders who have new ideas, right? The 21-year-old founder of Vibe Code, right? He's teaching me about the world and his generation today, knowing he basically grew up on the site I created, Reddit, and has a totally different worldview because technology has been a core part of his entire life. The internet, social media has been a core part of how he learned, how he connected. And it's wild just to see now the ripple effect. And like I said, I leave most of the conversations I have with founders, pitch meetings daily, feeling motivated and inspired. And it's an amazing time to be alive. And I definitely feel old. That is
you and me both, I assure you. How are the founders of today, the ones leading this AI revolution, how are they different from your generation?
I think what's very interesting, and I know a lot is said, every generation seems like they hate on the next generation coming up as being too entitled, too lazy, all these things. And I remember when it was assailed against millennials, when we were the 20-year-olds, I see it happening. I'm not falling into that trap. I do think the ones who are the builders of this generation, who are really high agency, who are really motivated, are head and shoulders above certainly me and our generation we were building. I think the fluency, the fact that they are truly digital native, the fluency they have with technology, but also the fact that they've seen a tremendous amount of change, right? The iPhone showed up in 2009, 2010. Those are all technologies that they take for granted. That's just the default standard state. And if, you and I, remember dial-up modems, it's crazy to think that
I plugged into my compact computer.
Everyone's hand, you take it for granted. But what'll really bake your noodle is the fact that this generation of founders is thinking about AI in a similar way. If you're 18 years old, the ChatGPT moment was a few years ago. And so you were really coming of age and you're about to go to college. And now you have a totally different worldview on knowledge because, we've democratized access to infinite human knowledge. And the tools on which we're building they're the worst they're ever going to be. They're only going to get better. And so the gift of that is the founders who are leaned in right now. They know it has never been a better time to be building a company, to be starting a company. It's never been a better time to be an 18-year-old, whatever, a 20-year-old, someone who has minimal experience, but has really high agency, really high drive, and is very curious. So it is an amazing time to be a founder, far better than it was 20 years ago. I think at any point in the last 2 decades that I've been either building companies or investing in them. And I know it feels like there is a big gap. At the same time, we have members of that same generation that are like opting out of work or railing against a lot of that. And I really, really hope that the builders win. I really, really hope that more and more people, especially young people, feel compelled to see problems and then do something about them, right? Not just talk about them, not just complain about them, but actually take action. And what I've just seen, the power of entrepreneurship to be able to just improve quality of life. Yes, build great businesses that hire lots of people, but improve the quality of life for civilization. I want to see more of that. And I do feel that gap with this generation. But for the folks who are leaned in, it's inspiring as hell.
Alexis, you're a father of young children. What is this AI revolution? What will it mean to how they learn? But in addition, what does it mean for that generation, their ability to find jobs 15, 20 years from now?
Well, okay. So on the latter point, I don't know. I want to believe I'm a tech optimist, and I do think more new jobs will be created than removed from the system. I think an easy example, we were fortunate to be early investors in a guy, Mr. Beast, 5 years ago. The idea of being a content creator, let alone a billionaire because of it, was unthinkable, 15 years ago, 20 years ago? And now it's probably one of the most common professions that a young kid, at least in America, wants to be when they grow up. So there is precedent, right, for, social media. That revolution was a significant one, not nowhere near as big as AI, but it was one that created entirely new career paths, sectors, industries that didn't exist before. And with every technological revolution, there's always new careers, new things that come up that you or I can't necessarily think of. The builders are going to build and do. And so I'm hopeful there are going to be more new ones created. We actually just in DC with one of our companies, Area 2 Farms, where they're franchising vertical farming. And when they talk about what is needed to manage a vertical farm, especially in a dense urban area where you don't have a lot of space, and because it's more vertical, you're going to have a whole new trades of people who are working on the robotics that help manage those farms and make sure the lettuce, grows on time and whatnot. And so again, we're already seeing AI, robotics, they're two sides of the same coin, creating new jobs, new opportunity, new innovation, better quality of life, right? Everyone deserves access to high quality, well-grown produce, right? Whether you live in a rural community, whether you live in a city. And so I feel like it'll be a net positive. That doesn't mean it won't be a bumpy road. And, how do I prepare my 8-year-old and a 2-year-old for this? I've already been paying attention. I've been tweeting about things like Alpha School, which I think are taking a really smart first principles approach to education. I do think the future of education for, let's say, K through 12 looks a lot more like having guides instead of teachers, and that's verbiage from folks like Alpha School and Prenda, where your personalized AI tutor is doing a lot of the instruction, right? I'm a big Duolingo user. You're familiar with that. That is probably the
great platform
expression of that, right? And there's no reason why a kid, regardless of their background, regardless of their home life, shouldn't be able to get personalized education. So if they need extra help with a certain part of math or a certain part of English, fill in the blank, you're going to have AI solve those problems for them, giving them that infinite access and infinite patience to support and customize learning. And then hopefully those kids get to spend the rest of their school day actually interacting and building up their emotional intelligence and solving problems. And I think the school of the future should really optimize the time with the AI to help learn, but also maximize the time off a screen so that kids are getting the things that can continue to be valuable when they grow up. Emotional intelligence, communicating, empathy, creativity. And those are things that, in my opinion, are what really make us human. Like those are the most delightful parts of being a human being. And essentially we have these amazing calculators now that have democratized access to a lot of the pure horsepower of intelligence, which should allow this next generation to focus on the more, I'd say, human sides of it. But it's a thing we think about a lot. There's no one solution. I serve on the board of Tiger Woods' foundation, TGR. They're doing a ton of great work with their learning labs, and that's an after-school curriculum. But we're talking all the time about how we can bring AI into those learning labs so that these kids, even when they come out of school, maybe their school systems aren't quite adopting this new tech fast enough. They can come to these learning labs, spend an hour, and get a huge ROI of customized, personalized learning. So I'm excited. I can see firsthand the way these technologies are improving the quality of life for the people I care about. And even, if I'm on a road trip or in the car for a minute with our oldest daughter, I can use AI to come up with, 50 trivia questions that are suitable for an 8-year-old. Sometimes I put like 10-year-old because I want to push her a little bit. And now I have a quick little trivia game that I can, engage with my child on, right? I want her to understand that this is a tool that will help her stay curious, that will help her solve problems, right? I want that growth mindset baked in. And I can't help but be a tech optimist in this regard, because I can see just how much power she's going to have at her fingertips that we could have only dreamed of when I was her age.
Alexis, let me channel the sports side of your brain. And earlier on today, I had a really good chat with Ted Leonsis, owns the Wizards, several other teams. His portfolio is valued at, I believe, close to $8 billion. We mentioned the Lakers, valued at close to $10 billion. You have been an early supporter, investor of women's sports. When in the world is this valuation gap closed between women's sports and some of these mind-blowing valuations on the men's side of the equation?
Look, it's coming quick. My tweet about how undervalued women's professional sports was in March of 19 went viral for all the wrong reasons, right? Everyone, I said this is a massive opportunity. I said I was going to either start or buy. It was an NWSL team, a professional women's soccer team, and one day it was going to be worth billions. And most people said I was an idiot and no one watches women's sports and that'll never work. And I said, save those tweets. And he ultimately paid a little over $1 million for the expansion fee to start Angel City FC. And in the wake of that success, right now it's valued at the most for any American women's soccer team. Arthur Blank in Atlanta just paid, I think, $160 million for his expansion fee. So that's quite an appreciation over just 5 years. And so it has been really validating to see, to call the shot, to spark that and see the growth. But I think anyone will tell you it's just the start. There is so much more room to grow. And remember, most of these men's teams' value is based on media deals that have been baked over decades. And, whereas for women's sports, when we're building a team, I just bought the LA franchise of League One volleyball. And it was just like 2 weeks ago, so hot off the press.
Congrats. Wow.
We build out, thank you. When we build out the structure for how to build that team, most of our revenue is not going to come from a media deal. Most of our revenue is going to come from brand deals. And so we've been able to build, Angel City's doing tens of millions of dollars in revenue a year. You're seeing a precedent here for more and more women's pro teams to basically build the muscle of revenue generation in a way that's much more about, business, right? It's about how do you drive revenue through brand partnerships and all these things that it turns out lots of CMOs are excited by. And the media deal is still down the road. So you have to earn that media deal through the viewerships, but the brand dollars obviously help you build the brand and prove the value. And it's this virtuous cycle. And you've seen that in the rapid ascent of WNBA team valuations and revenues. And I think, it won't be for every sport, but you can see the places I've been investing, obviously also starting a Formula One for track and field like Athlos. That's an entire league where I've seen this same opportunity that I saw with women's soccer, where the World Cup showed up every 4 years and then everyone was watching and then they all disappeared. The thesis was simple, why not make sure they don't disappear and keep investing? Similarly, track and field is the #1 Olympic sport. These athletes are superstars and then they disappear. They shouldn't disappear. So we built Athlos and 4.5 million people tuned in for our New York meet just a month ago. And we're rolling out a multi-meet league next year with teams. So I'm excited about all this. I think at the end of the day, we're only 5 years away. I think 6 years from my tweet. And I think there is still so much more room to grow in women's sports. I think we will absolutely see billion-dollar women's sports teams as I had laid out, and I will be sure to rub that in the face of all those haters on Twitter 6 years ago.
Last one, and I wanted to save this one, Alexis, because I think this is also in your wheelhouse, and it's also in the wheelhouse of my dear friends at Yahoo Sports. Why are collectibles having a moment, and what is next in this industry?
It has been an amazing ride. We love our partnership with Mantle and Yahoo. We've got some hobby awards right now, actually. I think this industry is starting to professionalize, right? The hobby was always a very mom and pop type business. And during COVID, everyone was locked down. Everyone was feeling pretty anxious, and nostalgia became really, really desirable. And so that's when I got back into the hobby. I collected cards as a kid, like a lot of kids in the 90s. I thought that collection was going to help me retire one day. It did not. Thanks, Sarah.
Same here. I just found my Batman cards the other night, Alexis, from the 1990s movie. I got a whole collection of them.
90s, yeah, it's tough. That's probably not worth much. I'm sorry.
Thanks a lot.
The good news is the card producers are being a lot more savvy with how they're the big problem is the oversupply, right? Supply and demand. I'll tell you what happens there. So the card producers are being a lot smarter now, a lot more creative, limiting supply. And here's the way I look at it, very simply. Collectibles are our generation's art. And at the end of the day, if I can show you a, Serena Williams rookie card on my desk, or, 86 Fleer Jordan, right? That feels like a flex. That for me, having a Warhol or having, pick your favorite modern or contemporary artist, it doesn't really do a lot for me. But if you abstract it away, right? What is, art on a wall is ink or something on a dead tree. And, that 86 Fleer Jordan is just ink on a dead tree. But there's a cultural significance for a generation of us who grew up during the rise of sports, really the commercialization of sports. And I think whether it is trading cards, comics, collectible video games, collectible music, even match-worn jerseys and outfits. I think these kinds of culture assets are still undervalued. Obviously, do your diligence. Don't, ask your wife before spending your entire IRA on these things. But very, very important is, and the thing that I really do believe is that, art and these culture assets have always been a part of, sort of the financial world. And you may not, agree with it, right? A crate of wine, priceless Van Gogh or whatnot. And I think this is just a new generation's version of that same thing. And thanks to the hyperconnectivity of the internet, so sports has never been more valuable. And I'd say in particular, if you think of this AI age, I've only gotten more bullish about the value of sports since that tweet in 2019, not just because it's been working and working well, but because across entertainment, AI is going and already going to upend every other pillar, right? Hollywood, television, all those industries you're seeing, right? The cost of production is going to drastically fall. There's a chart-topping song right now that I think is entirely AI generated. It's a bop, right? But the music industry is going to look very, very different. Taylor Swift, I'm still taking my daughter to see Taylor Swift. That's a religious experience. Kendrick Lamar is going to be just fine. But if you think of more vapid, sort of shallow, like one-hit wonder type artists, right? It's going to be very challenging when, a talented producer or a 16-year-old can spin up a really catchy beat, one of those earworms. And so every other form of entertainment is going to be really reimagined because of this technology. But I'm never taking my kids to go see robots play soccer. I'm never taking them to go see robots hit 18 hole-in-ones. Right? Can you imagine the Ryder Cup with robots? And it's just 18 European.
I could, but that's not. We won't take it. We won't go there for this conversation.
But it's boring.
Yes.
And so I believe if we project this out, every screen in our life, right? Think of how good the TikTok algorithm is, or you pick your favorite social network. They're all optimizing for that little bit of dopamine to keep us a little bit more attracted. And at the end of the day, this will only get better. And all the content we consume on a screen will be optimized for exactly what we want, when we want it, the way we want it, right? And so there is a dystopian side of this, which is a part of our humanity dies from that, because we're not here to be spoon-fed exactly what we want when we want it, right? Our species is here because we've done hard things, or our forefathers did hard things and overcame them. And there's a part of our humanity that dies if we're just getting this sort of spoon-fed, release. And so I think the last place left where we'll be able to live vicariously through this human experience of, like, going back to when we tried to catch the gazelle, and like some days you catch it and some days you don't. And it really sucks when you don't, but you dust yourself off and figure out how to catch it again. It's left in sports. And if you grew up like I did as a Commanders fan, you felt a lot of pain growing up and disappointment, but boy, does it feel good when that support is rewarded with some success. And I think sport is the last storyline that is going to be left with, that is truly like a must-watch experience for us in this age of AI. And I like I said, robots are not going to replace it. AI will just enhance the experience. And so then think of all the things related to that will continue to maintain or even increase in value, which takes me back to collectibles. It makes me think, like, again, if you're thinking about it as an investment, and again, do your own diligence, but if you think about it as an investment, that creates a really interesting opportunity for the asset class. And we've seen it with the marketplace alt that I had seeded. The growth has just continued quite well over these last few years.
Alexis, thank you for doing this. You've always been a supporter of Yahoo Finance. Thank you for making time with us for this big event. We will talk to you soon. Thank you so much, my friend.
Absolute pleasure. All the best. Love me some Yahoo Finance. And make sure to vote for the hobby awards between Mansell and Yahoo Sports.
Thanks, Alexis. Appreciate you, man.